Well, the All Ordinaries is now back to where it was at the start of June, with share prices recovering most of what they lost last week after the latest debt crisis blew up. Now, the banks all went up as much as 2% today, and industrials and miners went up fairly strongly as well. And there are a couple of really big gains. Pacific Brands, which sells Bond's underwear among other things, increased its earnings guidance and the share price jumped 50%. And BlueScope Steel went up 25% for no apparent reason. I guess we'll find out tomorrow what someone in the know knew today. Clearly, share markets are jumping around because of Greece, but on a longer-term view, the banks, which dominate the Australian market, have stopped falling. The graph shows the bank share index and the 5-year bond yield in Australia, which is upside down there. And you can see that the banks fell heavily in April because bond interest rates rose, falling on this graph. But for the past 2 months, bonds have stabilised along with global yields, and the banks have done the same. And on the subject of Greece, Australians have been doing their bit to help in difficult times, showing up in ever-increasing numbers and spending Aussie dollars in the cafes around the Parthenon and on the islands. And while most eyes are on Europe, where there were solid gains on the various share markets last night, there are more problems in Shanghai. The share market there dropped another 3.6% today, having earlier been down well over 5%. On commodity markets, there was a big drop in the oil price last night, as well as wheat, and iron ore and gold fell a bit. And the Australian dollar fell back into the 76s, but really it's an oasis of calm amid all the ructions on share markets. And that's finance.